I just hit $90,000 in a single day with triple Q puts. I never day trade. This may happen 3 times a year. So today was special, and I'm going to break down what led me to this trade, what day trading strategy you can steal from me to hopefully replace your income as well. And I'm also going to tell you the ideal conditions to where you look at the markets and it'd be dumb not to day trade. So let's get into it. As you know, I'm all about proof. I'm all here to gain your trust. So if I didn't show you an actual video of this trade being exited, it wouldn't make sense. So as you can see here, I have 150K towards the end of the trade from all the profit. And then I exited with a market order. And once I exited, the trade's locked in for, it looks like 89K. So 89K in a single day. This portfolio is at $212,000. I have some short MSTR stuff that, is just something I'm holding for a couple weeks, but that one is down 8K. But overall, for me to hit a single trade of $90,000, never been done personally. So this is a huge milestone, but what I'm going to unlock today is even bigger. So again, here's the proof from the Schwab site. 215K is my account balance at the time of closing. Even some of the MSTR stuff, and then 89K total on the day. And we're going to start withdrawing this now because I only day trade maybe 3 times a year. So I don't need to keep this money in. I'm taking it out. I'm going to do some fun stuff with it. But here are basically all the reasons why I took the trade, how I developed the confidence to put in 60 grand, how I managed the trade, what's the ideal way to manage it. I'm also going to tell you, the setup I use with my trading view setup with all the tickers I look at mid-trade. I'm going to tell you the ideal conditions where, again, it'd be stupid not to trade the markets. So first off, we'll start there. Right now is probably the easiest time to be a day trader. And if you are struggling in this market, I don't know what to say. Because when you can put on a trade and double your money, triple your money, or 10x your money, you don't have to put in a lot of capital. If you blew up your account, you're probably going all in. So let's say you have $1,000. You put $200 in puts at the right time, you should make $1,000, because the markets are moving that much. So for you to hit 2 bad trades in a row, you should still be a profitable trader on the 3rd trade in this market if you let it run and kind of maximize. So because the markets are moving so much, the risk is off, the opportunity is up, and this is only because the VIX has increased 50% or more. So when the VIX is skyrocketing, when we're going into a correction like this, the markets are going to be highly, highly, highly tradable. And next, I'm going to go over the trade setup on TradingView and show you exactly what I was looking at mid-trade and what gives me the confidence to either stay in it, know if it's good, know if it's bad. And I'm also going to tell you some of the secret candle setups I'm looking at. But it should be noted, I'm looking at the 5-minute chart. So Triple Q's 5-minute chart, ADD 5-minute chart, NVIDIA 5-minute chart. And if you comment on the video ADD, I'm going to give you my free ADD guide on how to trade it because it's way more complex than what I'm going to explain today. There's way more that goes into the ADD than just what I saw today. But as you can see, the trade is up. If I was still in, it's up 200%. So like I said, it's very easy in this market to get a double or a triple. And if you can do that, it's not as risky to trade this market. And I wouldn't be surprised if this trade hit $500,000 profit by the end of the day, just given the volatility and given the entry I had, it would just nothing better. So what I want to go over next is, again, what each ticker is on the screen and why it was meaningful for me today in the day trade. Number one, NVIDIA has been dragging down the markets post-earnings. With the tariffs, with all these random things, NVIDIA is the number one reason the markets have been pushed down. So I'm watching NVIDIA today. I'm watching the triple Qs on the 5-minute chart. And I'm watching the ADD on the right. The ADD is an internal metric with the NYSE, so it takes into account the 2,500 stocks and it looks at the net, which one of them out of the net, how many of them are bullish or bearish net. So if there's like 1,000 stocks bullish and 500 stocks bearish, the ADD would print 500 because it's the subtract those two numbers. And this was a huge, huge gauge for me today on why this trade was so incredible. So before we get into that, every day trader, if they want to really hit a trade with the highest conviction, needs to have what is called a high time frame bias. And I'll show you kind of what I looked at on the high time frame to give me the bias, because you don't look at a 5-minute chart and take 5-minute trades. You look at a weekly chart and take a trade off that on the 5-minute chart. Does that make sense? Like, you have to understand what the weekly's saying to even take any short-term stuff. So when I was looking at the markets, I started on the weekly for the triple Qs. And what I saw is we had an engulfing candle at the highs up here. And the bias from this candle has been bearish ever since then. Big selling, and we aren't bottomed at all. So unless we get a bottoming weekly candle, every day I'm trying to take the bearish bias. And if I look at the area that should bottom, it's typically where the lows are in the markets. So I see the lows in the market at 483. There's some lows that are being printed every day, some lows being printed every week. But for the market to bottom, it's going to go from a high level of resistance or support to a low level where that next one is. So my levels were here at 500 and then 483, 484. So in some world, some crazy, trade, I might have been able to hit this to 482 and that would have been a 500K day. But that might not happen. Who knows if it's going to be today or tomorrow. But the point is, that is where I expect the markets to go. And you're just taking these great entries on the short time frame now to try to push to that level, try to squeeze the lemon fully. So when I'm looking at the weekly, I gauge my high time frame. I've found my direction. Now I start plotting any key levels on the daily key levels that will help me enhance the 5-minute entry, give me the best one. And I saw a very odd entry, and it actually wasn't on the daily now that I think about it. I think I used the 4-hour with extended hours on. Maybe it was the hourly. The point is, like, hourly, daily, those are pretty similar. I'd either be taking like the, rejections at the highest areas. But what I took today was a really, really interesting setup. So I saw that the market made a bunch of highs here and made a bunch of higher lows. So what I like to do is connect the higher lows and see if there's any type of, areas from that, because there's going to be typically in a big move, this channel opportunity, this flag opportunity. And this is kind of played into my cards perfectly. And I told all the traders in the coaching call today on the live stream, we're probably going to trade up to the middle of this channel and reject. I mean, that was kind of my whole thesis this morning, waking up with the students and walking them through this market. And if I look at, let's say, again, the hourly chart, all I was looking for today was any push in the middle of the channel. And that's where I wanted to find the 5-minute candle. So there could have been a variety of reasons you liked the middle of the channel. There could have been, let's say, this whole pullback from here to here. There was a 50 fib entry. There was a fair value gap. Like, there's all this other stuff people can find that is on the internet. Like, you could have found a reason to get bearish here, maybe from liquidity or from fair value gaps or from fibs or from the channel, retest. Variety of reasons. But the point is, I was bearish and my entry was around this retracement. And I'm going to teach you a key lesson that's going to make you way more money than anything I'm going to say today. You're going to make the most money when you get the cheapest entries into the trend. So I wouldn't have been excited this morning if the markets just sold off, opened with a gap down and kept crawling down. I wouldn't even taken a trade. The trade I said to myself before the markets opened is I need the markets to climb into the middle of this channel somewhere, and that would offer me the most profit to the downside. And I started doing the math mid-trade. Or before the trade was on. I said, hey, if we're at 498, which was the area I was looking at in the 5-minute, if we're at 498 and we hit the lows, I'm going to double my money. And I said, that's a no-brainer because the market doesn't hit lows. It blows past lows usually, especially in a trend. So I looked at this as a no-brainer, especially at this area because of the risk to reward. I could double my money if I hit low a day. Easy. I'm doing that. And you could see, I still might be right and it might hit 485 today and we might see a 500K possible end of day run. But the point is, I'll teach you some management skills, but the point is this is still prime for continuation. So moving backwards, going back to everything. Weekly chart, got the bearish setup, daily chart, found some key levels, and I would say you can even mix in this analysis to the hourly chart. And then the 5-minute chart, you're looking for key candles and you're looking for market structure shifts. So I'll show you what market structure means, what it is, but it's pretty simple stuff. And I got in prime time, honestly. So here are 2 market structure shifts right here. If you ever study market structure, it's a very good gauge, a very simple gauge to understand the markets. So a bullish market makes a new high and a new higher low, a new high, a new higher low, a new high. So as long as we keep this pace, we're bullish. I just waited for this shift to happen where it crushed a previous low. So if we look at this, here's a high, a low, a high. This low here is very important because once that breaks, this morning bull trend is dead, completely dead. And this here, we pushed underneath it, and that's your first confirmation of the reversal. What you need to happen next is a lower high, and that's what we call double confirmation. Pretty plain and simple. That's how money's made. If you're trying to get in with the trend, you're looking for that mini shift. So macro is bearish. In the morning, we were slightly bullish for that 5-minute trend. Once we shifted, that's where money opportunity flips to another level. Not only do we have a lower high, we make a new low and then another lower high. So if anything, there was 1, 2, 3, 4 confirmations this went bearish. And at this point, I was in right about, once we shifted here, 497.50. So I bought my contracts for $200 a piece. Currently, they're trading at $700 a piece. You could see, my P&L would have been 170K. I don't care. I probably will miss 500K on this trade. I'm telling you right now. I've been through a lot of this, and you got to defeat the next demon. My demon I needed to defeat this year was a day trade that was a 6-figure win, and that was the first demon. So my next day is going to be a 500K, 250K day. But that was the demon I needed to defeat today. So I got out of everything way too early for some other reasons. But basically, I defeated one of my biggest demons that I wanted to accomplish this year. And with that being said, once I saw that 5-minute market structure shift, once I saw those lower highs being put in, that's where I got in. And you could look at key candles. There was so many obvious candles coming in. We see a lot of wicking. You love to see big wicks around these areas. And let's see, even on the 10-minute chart here, there's an engulfing candle at the high. That would have told me bears are in control. So even the 10-minute chart. I play off engulfing candles a lot. Like that was a super obvious, easy sign. But just massive wick here, even more confirmation I was right. This wasn't engulfing, don't really care about that. This one was semi-engulfing, so I love those type of candles. Now I want to show you management. So what I should have done is just sell half. Sell half, let half run. This would allow me to not miss out on, I missed out on 6 figures more, but I would have made an extra 50K had I just let some runners run. And if this keeps running, I would have made an extra 200K. So even just keeping a half position, a third position is insanely helpful on these big moving weeks, these big moving months in the market with the high VIX where it's increasing. That's where you want to be someone that doesn't take it all off. Just take half, take a third, let it ride. Or what you could do is roll them one more day out. So you go from today's options, the 0 days, you take, let's say, the 50K you're in those and push it to 50K tomorrow. And that allows you to get a gap down move. It allows you to get continuation, because sometimes the easiest trades in the market are the ones that you enter, you were right, and they just started. Like that was the beginning of the move. Like the easiest trades, sometimes the ones that continue for a couple more days. And I wouldn't be surprised, if we see the, sub 480 tomorrow. So if I was to even roll those, I'll show you what this looks like. Let's say I just rolled half. I rolled half to tomorrow. I rolled 170 contracts to, I can even roll them down, roll them down. So I'll take, let's say I take 65K, roll them to tomorrow. If we were to gap down, run to the 480s, this would be another 90K profit. So this is a scenario where you're taking a portion of your profits, you're allowing them to keep going. And by putting more time on your expiration and just holding it overnight, you might get that easy win. So the market even might push to the 480s today, and you might hit that 90K, or it might just have an insane gap down tomorrow. You might hit that too. But what's happening in the markets, just so you guys know, is tomorrow's options have a $5 premium. So if you multiply that by 2, we're pricing in the markets to move that. So $10. So the threshold for tomorrow is we're going to hit 480 or 500. It's probably going to go past that because of the VIX. But the point is, hitting 480 is a low bar. It's already priced into the option chain. So it's not crazy for me to say, if you rolled it, if you kept this position on, you'd make an extra 100% or so, or even more. But the point is, management is huge in this market. If you manage correctly, you can squeeze double, triple, quadruple the profit you see in the first hour of the trade. So with that being said, this is my full breakdown of how I hit a 90K day. You won't see this again on the channel for 6 months, I guarantee. So this is special. The knowledge I know from day trading has been over 10 years. Like this is all special, and I'll link a video to me on the best scalping strategy that I've used as well that can help you scalp better. So if you want to trade with us, we option sell. Feel free to click the button below, fill out an application. Option selling is where I make most of my income. And I'll see you guys in the next one. Peace.